So I recently bit the bullet and did the standard YouTuber thing of getting a brand new Tesla Model 3. And so in this video, I want to explain to you, and more importantly to my mum who's watching, why this wasn't just a massive flex and why I think it was actually a pretty reasonable financial decision. So I bought the car in July 2020 and I ordered it online, which was a very nice experience. The base price of the standard edition is £40,490, but I went for the long range model, which was £46,990. And then add in the white premium interior and the blue paint for the exterior, that was £1,000 each. So adding an extra £2,000 brought up the cost to £48,990, which when you take the insurance into account, which is about £1,000, leads us to a total cost of the car of around £50,000. But this 50k isn't what the car actually cost to me. It actually cost less than half of that, and let's break down why. So when you have a business, you've got this concept of writing off business expenses, which is a term you might have heard of before. Basically what it means is that if you're buying something purely for business use, then you can take the cost of it out of the business rather than out of your own personal bank account. So if you've got a business and you buy something that's exclusively for business use, what you can do is you can write it off as a business expense, which means the cost of the item doesn't count as your profits because it's an expense, and therefore you don't have to pay any corporation tax on it. In the UK, corporation tax is 19% at the moment. So let's say your business makes £100,000 in profit for the year, 19% of that goes to the government, so you pay £19,000 in corporation tax. But let's say I wanted to buy something like a Tesla Model 3 for the business, that would be £50,000. And so it would reduce the overall profits of the business down to £50,000. I'd still pay 19% corporation tax on the remainder, so I'd be paying £9,500, but my total corporation tax bill is 19% less than the cost of the vehicle. So I'm paying £9,500 less corporation tax because this counts as a business expense. And so if we think about this £9,500 of tax that we're saving, in the end, this £50,000 car actually only ends up costing my business £40,500 because of the corporation tax saving. But that begs the question of, is it actually legit to write off a car as a business expense? So if you want to write something off as a business expense, the rule is that it has to be wholly and exclusively used for the business, and any personal use is insignificant or incidental. So if you're a YouTuber and you're buying a camera, for example, that's very easy to justify as a business expense because obviously you're using that mostly for business use. But it would be a lot harder for me to justify for a car, especially because this business doesn't require me to travel all that much. So in the UK, if you buy stuff as a business, but then there is some personal use as well, that gets a special tax called benefit in kind. And it's like the government thinks that you're being paid the value of the thing that your business bought you, and therefore you kind of get income taxed on that amount. And so if this were a normal car, that would be quite a lot of tax I would have to pay every year for using it for personal reasons. And often that would mean that it's actually not worth buying a car as a business expense. But crucially, in April 2020, the new budget, which the Chancellor of the Exchequer sets out every year, said that specifically fully electric cars are exempt from benefit in kind tax. And so the benefit in kind tax rate for this car is 0%, which means I can buy it as a business and I can use it personally however much I want, and I won't have to pay any extra tax on it. And the reason they've done this is because in the UK, over half of the cars that are bought by businesses. And so the government's realized that if they incentivize people to buy electric cars by reducing the tax rates, that means overall more cars in the UK will become electric, and that will be good for the environment in the long term. So currently the car's costing £40,500 because of the corporation tax saving, but there's still a few more discounts we can add to the price of the car. So if you're a business owner and you want to take money out of your business, usually the best way of doing that is by something called dividends. The problem is that, like everything else in life, dividends also get taxed. And so in England, if you're a higher rate taxpayer, i.e. you earn more than £37,500 a year, which I do, then your dividend tax rate is 32.5%. So let's say I wanted to take out £10,000 in dividends, I'd be paying £3,250 to the government as dividend tax, and that would leave me with £6,750. Now, this is very relevant to our Tesla discussion because the Tesla costs £50,000, and the alternative, i.e. not buying the car and taking out cash instead, means that I'd be taking out that £50,000 as a dividend. So firstly, because that £50,000 is profit, it means it's taxed at 19% for corporation tax, which takes it down to £40,500. And then I take that £40,500 out as a dividend, which means it's going to be taxed at 32.5%. That means I have to pay £13,162 to Her Majesty's Revenue and Customs, which leaves me with £27,337.50p. So thanks to corporation tax first and dividend tax second, this £50,000 that I've tried to take out of the business has gone down to just over £27,000, but that's still not the end of the story. We also have to take student loans into account. So I spent 6 years at university studying medicine, if you didn't know. And so my student loan has gone up to about £60,000 that I still have to repay. And because the system is quite nice in the UK, you only pay a certain percentage of any amount you earn above around £20,000. And so I've got to pay 9% of everything that I earn above a certain threshold to this student loans company. So if I want to take out the price of this car as a dividend, first it goes down from 50k to 27.3k thanks to corporation tax and dividend tax. And then I pay another 9% to the student loans company, which takes it down to 24,877. So putting it all together, let's think about these two scenarios. Number one, buying the Tesla Model 3, and number two, taking out that £50,000 in cash instead. If I buy the Tesla Model 3 for $50,000, it ends up costing my business $40,500, and I get a Tesla that I can ride whenever I want. But if instead I try and take that £50,000 in cash instead, it gets whittled down by corporation tax, dividend tax, and student loan repayments to around £24,000. And so in a way, I'm getting this £50,000 car for around $24,000, which is less than half price. And personally, I would be more than happy to pay 24 grand for a brand new Tesla Model 3. And this whole thing about business expenses is one of the reasons why having your own business is such a powerful thing, because especially if you're a solopreneur or a creator or an internet entrepreneur, most of the stuff that you're going to buy for business purposes is actually going to be tech. And so you can afford a fancy ass camera or a fancy ass MacBook or like a super widescreen monitor, because effectively you're getting all of this stuff at half price or less. If you found this interesting and you're potentially interested in starting your own business, here is a video called How to Make Money Online, like the 3 levels of making money online, where I explain how I got started with making money on the internet and how you can do the same. Thanks for watching, and I'll see you in the next video. Bye-bye.